Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update from a new guest today. It's Jordan at Mining Stock Monkey. And Jordan, I have been watching your videos over on YouTube for the last couple months. And for those that haven't checked out Jordan's channel over at YouTube, you should definitely do so. We'll put a link down below this interview. But the Mining Stock Monkey approach, the approach you take in your videos is very low key. You don't have a lot of build up music. There's not a lot of bells and whistles. You're often there with the whiteboard breaking down the pros and cons of companies. And you've looked at companies like Alamos Gold, B2Gold, Agnico Eagle, and you do some deep dives into their balance sheets, into some of their jurisdiction risk. You look at the company management team, you dive into quarterly reports, you dive into some news sources that are not ones that a lot of investors get into. And I just thought the analysis that you do in the mining sector is unique and it's got my attention. And I just think it'd be nice just to kick things off today, Jordan, if you just share your background. How did you get into this sector? You mentioned you've been doing this for 17 years, investing in the mining stocks, but how did you get hooked on the precious metal sector? And then how did you find your way into the mining stock universe?
Yeah, thanks for having me on, Shad. Well, back when I was a kid, my parents bought me a metal detector. And then I started going around the backyard. And if I remember right, I found a penny first. And then I think I found a nail. And then I took a few more steps and I got a few more dings there, dug it up, and it was an old silver quarter, a 1901 Barber quarter. And from then on, I was kind of hooked. And that's how I got to be interested in precious metals. But then later on in life, my dad became a financial consultant or a financial advisor, and that kind of got me into stocks. And then around the time I started college is when I started investing in the mining stocks.
Now, the mining stocks is a wild universe to get into because they're very volatile. They often have big leverage to the moves in the commodities. One of the things that I've been impressed by is how you help investors look at the analysis in companies. What are the red flags? What are the things that you avoid? What are the things you look for? So if you think about some of the bigger producers that you've done a deep dive in, maybe share with people how you look at companies if you're going to make an investment. What attracts you to a company, and what are some of the things that you avoid if you see them with a company as you start doing a deeper dive into it?
Yeah, sure. So first, if I'm not familiar with the company at all, probably I'm going to look at the company presentation just to get an idea of what the company is about. But keep in mind that that's a sales pitch. So you can't use that for informational purposes. For your information, I think you need to dive in deeper. So if the overall what the company is about is attractive to me, I'm going to be looking at the management team. I'm going to be looking at what their history has been. Have they been successful in the past? And then the first thing I'm probably going to do is I'm going to look into the balance sheet. How are they for the next year? Do their current assets exceed their current liabilities? Do they have that positive working capital? And if not, do they have a plan to fix it? I'm going to look at the income statement. I'm going to look how high their G&A is relative to their revenues, relative to their gross profit. I'm going to look at their other operating expenses, because if their operating expenses and their G&A is high, even if they're a profitable business, that might be eating up all the profits and not allowing us investors to make any money. Something else that's important to me is that the management team is aligned with shareholders. Do they own stock? At what price did they get that stock? I like to see them have at least 5 times their annual salary plus bonuses and shares to ensure that their motivations are aligned with my motivations as an investor. But most of my research is pretty boring, and that's reading the quarterly reports, reading the annual reports, going into the proxy statements, and it's lots and lots of reading.
Well, Jordan, just to that point, I don't think that most investors do the level of due diligence that you do when you're looking at a company. You put out a series, one of your videos, which I think is a great one for people listening to check out, is your biggest mistakes in mining. And one of the ones you covered is buying on a hot tip, just because somebody told you it was a hot tip. I think a lot of people do that. They just buy because they hear somebody else talking about a stock. Maybe they pull up the corporate presentation, look at it. Maybe they look at the last news release or two, but they just don't dive into the quarterly filings or annual reports or proxy statements like you do. So what advantages do you think that gives you to maybe overturn some rocks that haven't been turned over by other investors?
Well, in the annual reports and the proxy statements, that's where all the proverbial bodies are buried. That's where you find out what's really going on with the company, how the dishonest management teams are taking as much money as possible out of the company. For example, you find out that they have a consulting company that's getting paid a bunch of money, or you find out that they're leasing an ambulance to the company that they bought and that they own, and that they're overcharging the company for. And you find out all this stuff that's buried in these annual reports and proxy statements. And you find out that they got a bunch of shares for almost nothing and all sorts of stuff like that.
Yeah, it's always wild when you find out that they own a drilling contractor company on the side and they're paying themselves huge amounts of money to drill, and they don't really care if the company advances because they're making a ton of money on their side projects, or other people rent out trucks to the to the company from their own trucking business. Yeah, there's a lot of those games that are played, and you don't know about that as an investor, especially as a retail investor that maybe don't have a lot of avenues to turn to. But the reality is a lot of people don't do that deep dive, and I know I've been guilty of not diving deep enough and then getting bit by it. In your experience, when you start looking at these companies, you then have to figure out which ones make it into your portfolio, which ones you actually buy and hold, or which ones you sell. As you're comparing them, you do a great job of comparing companies where they're at today and which ones may be more undervalued relative to their peers. So when you're doing these peer comparisons and saying, hey, here's a couple of solid gold producers, but here's one that may be more undervalued than the others, what are some of the things that you look for there to compare peers in the same industry?
Sure. A lot of it can be seen by comparing their income statements. So, for example, what percentage of revenue goes to G&A in company A versus company B and company C? When you lay out things like that, it makes it pretty obvious which one is run with a tighter ship. And you may also have to include other operating expenses as well, which you can find in the income statement. But yeah, often comparing those companies, like, okay, taking gross profit versus G&A plus other operating expenses, and comparing one company versus another company, you get a pretty good idea of which company is going to leave the most money for investors after all the expenses are taken into account.
Well, another thing I've seen you do is you've looked at different operating mines, but you kind of fast forward the clock and find out when is this mine running out of ore, or when is it going to decline. And so some of these assets, if you look at just their current production profile, it can give people the false sense that that's how it's going to stay and only grow. And there's been a couple of times where you've pointed out, hey, some of these mines actually are slated to go off the books, but then you also look at growth areas that are maybe not being factored in that could actually contribute in the future. So how do you contrast reserves starting to shrink in the future versus how much value do you place on development stage assets in their portfolio that could lead to growth?
Yeah, I think I tend to like companies investing in growth more than a lot of people in the market, because it seems like lately in the market, any company investing in growth is being punished. But yeah, I'm looking at the pipeline. What do they have coming up? And what level are they going to be producing at? And what assets are dwindling in terms of reserves? Like, I recently did a video on B2Gold, and they have their mine in Namibia, which doesn't have a lot of reserves left. However, they are discovering more ounces there, and they're putting in a lot of money to try to discover as many ounces as possible to extend that mine life. And in my eyes, it looks like that mine life will be extended for about another 5 years, but maybe only at half the current production rate. So they're going to be losing some ounces there, but at the same time, they're building their Goose mine up in Canada, and that's going to add about 310,000 ounces. And then after that, they have another project that they're advancing in Colombia. And then they have other things that they're involved in as well. Like, they have a project in Denmark, I think it is, and also they're part owner of Snowline Gold. So maybe that's a potential development project in the future. So when I'm comparing these things, I'm just looking at, okay, in 3 years from now, what's their production probably going to look like? In 5 years from now, what's their production probably going to look like? And are they going to be able to continue growing these ounces at Namibia to be able to continue producing there? Or is that mine going to go into reclamation here pretty soon? But yeah, it's kind of just looking forward and again, reading their annual reports, reading their quarterly reports, you get all this information, and then you just kind of have to put it onto paper and figure things out.
Yeah, and I find it fascinating because when you start looking into growth, you're already separating yourself from a lot of investors that are only looking at the here and now. A lot of people have a what have you done for me lately mindset. They have the recency bias to extrapolate out whatever the recent quarterly report is out into the future for infinity instead of looking at what is happening in the development pipeline, what is happening in their production profile, what's happening on the balance sheet. Do they have the money to do what they say they're going to do? There's a lot of good intentions in the mining industry that never happen because the money's not there. So you're looking into all those factors. When I've seen you, Jordan, do most of your videos, they're on larger producing companies. But I think that you also occasionally get into the development stage companies where it's just a development project that still has to go through the process of becoming a mine. Do you invest in those too, or do you just mostly hang in the producers?
No, I invest in those too, but I'm not a geologist. I'm not an engineer. So it has to be backed by good people. It has to be backed by people that I really, really trust because I myself am not going to have all the knowledge necessary to know whether that mine will actually get into production or whether that deposit will actually become a mine. So when a company is already in production, you can't fudge the number. I mean, you can do some fudging, but you can't fudge these numbers like they do in these studies like the PEA, PFS, and feasibility studies to make the project look more attractive than it is. And the CEOs or the promoters are often smooth talkers and they make it sound amazing and they make it sound like the relations with the locals are great and that there's going to be no problem getting permits and things like that. But you need to know a lot more than what the promoter is telling you. And if it's not backed by great people and you don't have that on the ground knowledge of what's going on there, well, then I think that's often a case that's going to be too risky to invest in.
Yeah, it's a great point. There's a lot more data available for producing revenue generating companies. And by diving into the balance sheets, you can get a sense of what's working and what's not, or what may be problematic, or what's really going incredibly well. And so you can see the margins, you can see, are they building cash flows? Are they paying down debt? Do they have enough money to keep paying the dividend? Those kind of things. So definitely more information with the producers. I want to ask you this question. It's kind of a wild card question, but I noticed, Jordan, that after about 15 years in the industry myself, that most people gravitate towards the drill plays. They love the exploration stories because of the thrill of the treasure hunt. Just like you with the metal detector finding the silver coin, I think a lot of people are hoping they find pay dirt in the ground, but there's even less information there. But a lot of people think the only way to really make big money is during that discovery phase when people poke some holes in the ground and find gold or silver or copper. You invest a lot in the producers and you maintain that you can make good money in the production stories. Maybe just share how there's still a lot of money to be made just following the producing stocks.
Yeah, sure. It's going to be a lot harder to get 10 baggers, for example. But I mean, if the price of the metals really run, well, then that's certainly possible. But for example, I mentioned my recent analysis on B2Gold, and at the time, the stock was trading, I don't know, 270, 280, something like that. And my target price going forward after digging into the numbers was, if I remember correctly, in excess of $9. So there, if things work out how I think they're going to, that's more than a triple in a matter of a few years. You don't need a lot of triples in 3-year time frames in your life to become very, very wealthy. Like those triples compound on each other. So to me, these economics are often a lot more attractive than the exploration plays. A while back, I looked at every single precious metals mine that had recently gone into production, and I dug back to find the earliest dated drill hole I could from each of those mines. And I was shocked when I discovered how many years it was from the first drill hole to the start of production. Now, this isn't statistically significant, but it was amongst like 15 different companies. And the median time it took for a precious metals company to go from first drill hole to production The median time was 29 years.
That's a long time. I think that's longer than most investors, Jordan, are willing to wait for the thesis to play out. Yeah, that's an astonishing figure. And as we know, there's no shortage of setbacks and timeline moving and people that are waiting on permits or having to go do another study or having to, reanalyze their project. So it does take a long time for these assets to come in production. And by analyzing the companies already in production, you've already saved yourself a long wait, and there's still opportunity to be had. I want to give you a moment just to share with people listening in what you do at your service, because you do offer a service to investors, kind of more of an over-the-shoulder service where you're sharing what's going on in your portfolio. But just walk us through how you approach that service for people that may be interested.
Yeah, as you mentioned, Shad, I have a YouTube channel where I do these deep dives into various mining companies. And I would actually suggest that your subscribers start there, because if they like my work, then they can go check out my newsletter. But in my newsletter, what I'm doing is I'm sharing with you what I'm buying or selling before I make a trade. And I'm doing really deep dives into these companies, even deeper dives than I go into in YouTube. This is what I do full time. I'm doing this 200 hours a month. And in my newsletter, you get my very best research. So I'm trying to dive deeper than what the average retail investor is going to know. And sometimes that allows me to find out information before most of the market knows that information. And then I share that in the newsletter.
All right. Well, I appreciate you taking some time with us here today at the KE Report, Jordan. I'll put a link for people listening in to Jordan's Mining Stock Monkey YouTube channel and also a link to the newsletter. But I think it is a good point to start with some of the videos. I think after you watch some of the deep dives that Jordan does on the whiteboard and you start looking at the analysis, you'll learn a few things and you'll come away more informed. So definitely appreciate you spending some time with us here today and looking forward to our next conversation.
Thanks, Chad. I appreciate it.